So for all of you out there that are trading and see your order get skipped and wonder how this can happen, remember MU runs a 5 cent to 6 cent spread. Since the orders were at 96 and the spread was a nickel away, I never got filled. Hello everybody, my name is Thor Young. I'm a moderator at Bear Bull Traders and I'd like to do a recap for you. But before I get into any of that, I need to get straight to the chart so I can show you guys this live trade I've got going on, because I want to talk to you about the spread and the bid and the ask. So right now, as you can see on the chart, I'm on a trade in MU, and this is the real world. Look here, MU, we had all the way to 86 2 times, but my fill is still sitting here. I never got filled on MU, even though it went to 86 2 times, right? So I want to talk to you guys about how this can occur, because this is how the spread works, and this is how you need to understand for stock trading on how things work. So the question will be is, wait, how did the price go to 86, right, when you had orders at 85.97? And the explanation there is as follows. Now, if you want that explanation, make sure you like and subscribe to the channel. Really appreciate it. Ring that bell, all that good stuff. Haha, got you on that one. Now, anyway, so on to the explanation. So what happens is when you're stock trading, you have to understand as a day trader that you're exchanging shares with a market maker, right? And I'm going to use this notepad to illustrate, right? This is you, right? And this would be me. So when you go to buy shares, you're not buying shares from me. No, that's not how it works. You're buying shares from a middleman or someone in the middle, which is our market maker, right? When you buy shares from that market maker, you're going to pay the spread for those if you're coming in on a market order, right? Well, in this instance, right, I had orders at 85.97, right? But people were paying $86 for their shares because they're buying them from the market maker. Again, they're not buying them from me. They're buying them from the market maker. The price itself never actually got to 85.97. So who forever was buying shares at $86, they were paying premium, right, for those shares, and the stock price never even went there. So anyone holding those shares, right, or buying those shares at 86 paid, could have paid the highest price for the day on those. And that's what you risk when you buy using a market order and you're buying high of day, right? So since that price never got to 85.97, I never got my fills as a seller, even though buyers paid $86. And that's how this can happen. So for all of you out there that are trading and see your order get skipped and wonder how this can happen, remember, MU runs a 5 cent to 6 cent spread. Since the orders were at 96 and the spread was a nickel away, I never got filled. So keep that in mind. Maybe I should have put my fill order a little bit lower to ensure I would get fill priority. So instead of getting my partial here, which was my target, unfortunately, it looks like MU might turn all around and come all the way down and take me out at break even on the rest of my shares, which is unfortunate. But it did illustrate it's a really awesome moment to talk to y'all about spread and how this all works. So I hope everyone enjoyed this little lesson on spread and talking about the market making process. Comment below, feel free. And if you want to see more about this, let me know what you're interested in. We'll talk more about it. I hope everyone has a great day, y'all, and always keep it green. Thanks.